All right, let's dive right in. We're talking about a huge shift happening in the market right now. It's all about how we're reading the economy. And trust me, the rules are changing way faster than most people think.
You know, there's a really big difference between the raw data that gets reported
and how people actually interpret that data. And right now, that interpretation is everything.
So let's ground this with a real number, 2.4%. That's the latest headline inflation number from the CPI report.
Now, on paper, you look at that and you think, okay, great. It looks like progress, right? We're getting closer to that 2% target from the Federal Reserve. Feels like a win.
But let's be real. Does a single number ever tell the whole story? That's the big question we're tackling in this video. Okay, first things first, we have to understand that there are basically two completely different inflation stories being told at the same time.
And this is that critical split. The headlines are all celebrating, hey, gas prices are down, which is great. But then you look at the actual household budget, and food is still crazy expensive. Healthcare costs keep going up, and things like insurance, they're just sticky. That pressure hasn't vanished, it's just moved around.
And this right here is the absolute key. When what you're experiencing day to day doesn't match the official numbers, the story, the narrative, starts to matter way more than the math itself.
So what does this all mean for policymakers? And maybe more importantly, why does it feel like the markets are already playing a different game?
It all comes down to this idea of policy flexibility. Think of it as the close enough zone. Inflation doesn't have to be perfectly at 2%. Once it's close enough, policymakers suddenly have way more room to maneuver, even if the problem isn't 100% solved. And markets, they get that instantly.
But here's where it gets a little tricky. The labor market looks really solid. Unemployment's low, we're still creating jobs, there are no big red flags in the data screaming at the Fed to cut interest rates. So why is the market so convinced cuts are coming?
It's because markets don't just react to what's already happened.
They price what they think the incentives are for the people in charge.
And ultimately, they're pricing the direction they think leadership wants to go. It's a game of anticipating the next move, not just reacting to the last one.
Okay, so let's bring this home. What does this actually mean for different assets? Well, it's leading to what you could call a great rotation that's happening just under the surface. And you can see a clear dividing line forming. On one side, you have assets that are going to feel the squeeze. Think of software companies that don't have a really strong competitive advantage or a durable moat to protect them. But on the other side, you've got companies with real, tangible assets, deep infrastructure, logistical power, heavy capital, that can hold on to their pricing power no matter what.
And here's the bottom line. Yeah, rate cuts might offer a temporary cushion for the market, but they can't just wave a magic wand and make these deep, structural pressures disappear. There are going to be clear winners and losers here.
And then you've got gold. Gold is kind of playing its own game entirely. As real yields, that's basically the interest you earn after you subtract inflation, start to fall, and as central banks around the world look for alternatives to the dollar, gold just becomes more and more attractive.
So, let's put this all together into a new framework. Step 1. Inflation is cooling down, but only in certain spots. 2. The job market is holding up. 3. That gives policymakers a lot more flexibility. And 4. Because of all that, markets are now pricing in both easier policy and a major rotation underneath it all.
Now, I want to be really clear. This isn't about being optimistic or pessimistic. It's not about being a bull or a bear.
It's about understanding this narrative shift, seeing this rotation happen before it's the obvious thing that everybody is talking about. So, I'll leave you with this question. When you look at the market today, do you see a temporary sigh of relief, or do you see a deep, fundamental rotation taking place? I'd love to know what you think, so drop a comment below.
If this video helped you see the market in a new light, do me a favor and hit that like button and subscribe to Finance Deep Dive for more insights like this. Moments like these are where finance and technology collide. Thanks for watching.